We're talking today about Moving Average Convergence Divergence, or MACD as it's sometimes known. It's a much used indicator in the technical analysis toolbox. What is it precisely, and how do we apply it to price action? Lee Sandford joins us now from tradingcollege.co.uk. Lee, welcome. Now you, on your day job, you teach this, and I know you do use it, don't you, personally, as an indicator that you follow quite closely. Just go back to basics. What is it, and how did it come about?
1970s, late 1970s, designed by Jared Appel. It's a great momentum-based indicator. It's very popular. A lot of people like to use it. It's simple. Basically, it's based on moving averages. So yeah, it's momentum-based, and it can catch reversals very nicely as well.
If we turn to the chart, here we've got euro-dollar, but let's talk about how it's all constructed first of all. This appears as this bottom line here, so it's an oscillator, correct?
Yeah, I mean, yes, and it consists of several components really. We've got the MACD line, we've got the signal line, we've got the histograms, we've also got that zero line that runs through the middle of that indicator down below there. So it's got a few components. The MACD line is basically made up of two moving averages, the difference between the 26-period moving average and the 12-period moving average. And for people watching really, you can actually go to the chart and look at the 12 and 26-period moving average, look at the difference, work out the difference, subtract the 26 away from the 12, and you're going to get the MACD line value there.
So that's the blue line at the bottom?
The blue line, yes, right, is the MACD line. And then, I mean, this red dotted line, of course, you can change the appearance of the MACD, whatever you want it to. And that is just basically a 9-period exponential moving average of the MACD line. And they pretty much follow each other.
Do you know why there was this preset 12, 26 and 9 in the MACD? And this top left-hand corner, you can see the moving averages that we're using on this. I mean, it always seems to default to that.
Yes, I mean, is there any, should you be changing the settings, the default settings that were designed by the designer of this in the 70s? And some people do. Some people like to speed it up a little bit, but the default settings are 12, 26 and 9. I think if you're going to test something, you should start with default settings and then tweak it from there.
Okay, let's talk about the histograms and how they work with the blue solid line and the dotted red line.
Well, the histograms play a big role in my trading. If you look at the histograms here, all they're doing is just measuring. Let's go to the right here. All they're doing is just giving you a measurement, a value of the difference between the MACD line and the signal line. Now, when the lines start to separate more, the histograms get taller, or they drop below the zero line here. This is great for snapbacks, reversions to the mean, and trades that if somebody's looking for a reversal, maybe if you're using something else like a pivot point, if it comes into a pivot point, you've got this big separation on the histogram, which relates to the two lines, then the price could snap back quite nicely and you can make a nice winning trade. As you can see here, the euro dollar is just starting to gather some strength today because of the histograms are quite wide, quite long. And when they get long, the price tends to revert back to the mean or has a retracement.
Okay, before we get on to your trade on this, because I know you've got a trade that's open on this, just talk to us a little bit about divergences with price action and the MACD. How do you measure those, and what does it give you sell and buy signals?
Well, divergence, we're looking for a reversal. Price has gone too far. There's two ways on the MACD that we can use divergence here, and the histograms can be used as divergence. We can draw a line from here to here, and it slopes down at an angle, and then the price is making a higher high. A lot of people will use the lines though. The lines will diverge, i.e. that this line will be lower here. I suppose if we go back here in April, you can see that this area here where we got a reversal on the 26th of April, these lines were rising, the momentum on price. Remember, we're dealing with moving averages here of price was rising, and we got a reversal. Histograms are good to use as well though.
Yeah. Going to price action, you've got a red and a blue line up there. Now these are exponential moving averages, not simple moving averages. What's the difference between that, and what guide does that give us?
Yeah, well, simple, we're basically, it's looking at the back end, and really what the exponential one is, it's a bit faster, and it's looking at the front end, dropping off that front end price and measuring that front end, and really weighted to more of a quicker moving average, really, that does move with price. So I always use exponential moving averages. They're just faster in relation to price.
Yeah, okay. Let's talk about your trade and talk about how you apply it to this particular chart. As I said, you've got a trade open, I believe, on
Yeah,
this.
I'm long euro here, long from yesterday, in fact. And the reason is, if you just look at past price action, euro dropped significantly, and then we started to get these histograms that were extended here, and then we rally, little drop, rally, little drop, and it's the histograms. And really what it is here for me, it's this histogram drop here where those lines get separated. Price is going to snap back to the mean. I'm looking for a move back up to 112.63, which is the moving averages. Stop placement just underneath this zone here. Just looking for a 60-odd pip move back, and then maybe we'll go into trading stop, and maybe we can make a new high and start to push higher.
Okay.
So, yeah.
All right. That's your trade on euro dollar. Let me just quickly change the chart, 'cause I know we've got a couple more charts to take a look at. And I wanted to bring up one here, which is sterling against the euro. Now, the reason why I wanted to bring this up was because we've been talking a lot to clients about this in the early morning call, and this big drop that we've seen for sterling. I think this is the longest run of negativity for sterling against the euro since the euro's inception back in 2000. But the point about the MACD, and I really wanted to bring this out here, so we've got this really low slung blue and red line down here. They continue to battle out with each other, so you can see the histograms of, in fact, they're actually all pretty much all green, which means the blue is above the red dotted line. But it's really low period here. As we see new lows. We've got a new recent low here struck on price action. How do you go about trading this? And what does this low area down here mean on the MACD? When it doesn't recover in any great way, shape or form, would you still continue to sell this market, or how do you trade this?
I would not continue to sell this market. Now, as the price accelerated to the downside here, you saw the histograms get long. The MACD and the signal line were nice and healthy, running nicely alongside each other, following each other nicely. And then what's happening here is that, remember, the MACD is based on moving average prices. You're starting to see this flattening of these lines, and price is losing that pace to the downside. We are seeing, if we were looking at what I was just mentioning with the divergence, you can see here there is no histogram pointing down at all. And so we could quite easily get a snapback rally here. But all we know from the indicator is that price is losing steam to the downside. And if this candlestick performs some sort of hammer reversal, that could be a heads up to maybe see a push higher. Slow market though, Jeremy. Slow market at the moment. Could continue to drift lower.
Okay, let's move on to take a look at one index that I wanted to pull up, and this is the German DAX. And we've got this rise here, and in fact the reason why, I think we spoke about this just before we went to air, I wanted to pull this out because it's got, I think actually if you see the MACD, it's actually got a red histogram has just appeared, meaning we've got this crossover here. But the moving averages haven't yet crossed over.
No.
Market's already gone down. What's this telling you?
Well, we're getting across on the MACD with the signal line here. Some traders will trade this as a signal to get short. I think with the MACD cross, traditional MACD cross strategy technique is better on longer term charts, daily, weekly, monthly, and they work very nicely. I wouldn't want to trade it on a 5-minute chart, a MACD crossover. But first things first, we were extended. Okay, so the histograms got high, the lines run away from each other, and we could have been looking for a short higher up here, but we are crossing. Now, if we cross, we could go through a period now, like we did back in, was that May time, where we went, we had some negative prices here. So yes, we're crossing down. I'd like to see a break below the moving averages and possibly a retracement, then maybe get short. Something like, as we come down here, we just rally, then we get short. But absolutely, we're crossing down. There's potential for more bearish price action.
Going back 2 or 3 days, would you have put a short trade on earlier than now?
Yeah, I would have done. I think
because the histograms have started to curl over.
Well, you've got to decide. It's quite an aggressive trade. When those lines separate and those histograms get high, price reverts back to the mean. You could start to nibble on a short side trade with that. and we're going to get a reversion back to the mean, back to those moving averages. What I would say though, just one thing that we haven't mentioned is when this zero line here.
Yes.
People will look at this zero line, and what it's actually saying is that if you put a 1226 exponential moving average up on the chart here, you see the moving average cross here?
Yep.
Well, that's when the MACD line goes above the zero line.
Right.
Okay, so if you're trading a MACD jumping across that zero line, all you're doing is trading a moving average crossover on a chart, basically.
Right. So that zero line is obviously, as you say, when the red becomes green and green becomes red on the on the histogram.
Those moving averages on the chart crossover.
Okay, another one. In fact, you were quite sanguine as to which chart we pulled up. I know the MACD obviously works on any chart, but this is gold, and the story of gold has been well told. This is the daily chart, and this big rise that we've had, I think, to 6-year highs. But we've got this crossover. In fact, the crossover is building up on the downside now. No indication yet of any let up on the MACD, but all of a sudden you've got these little doji candles here. Dragonfly, whatever it is, and price action wouldn't necessarily follow what we got in MACD. MACD looks quite negative, but price action sort of beginning to see some support. How do you trade this sort of price action? And
the MACD crossover of the signal line doesn't mean that the price is going to have a big reversal. It fails so many times, so you've got to be so careful just trading that signal. I'm bullish gold. I think gold's going for another leg to the upside. When the MACD line gets above the zero line, remember the moving averages are crossed over, the 12 and 26 are crossed over on the chart. It's bullish. It's bullish. Right, but if we just bring it in slightly here, just bring it in, you can see as those lines separated and the MACD separated, price just come down for a few days. So how could a client trade that? Well, they could move their stop tighter. And if you're more aggressive on the entry, you can maybe look for a quick short trade. But I'm bullish gold. It's above the zero line. It's just having a pullback, and we could go, and the moving average is underneath price supporting. I think we could go for another leg to the upside. Yeah.
Okay. So MACD, one of your preferred measurements. Do you apply it as a matter of course to every single chart, or do you selectively use it?
Every chart. I think you should become an expert with your tools, so it's on every chart, every instrument.
Yeah. Okay, it's a pleasure to get your thoughts on this. Lee, thanks indeed for joining us. Lee Sandford from tradingcollege.co.uk with the MACD, how he applies it to his charts and how he discusses it with his colleagues at Trading College. If you want to catch up with Lee, you can do so through his website.